A great day for learning from My Real Estate Notes. Today I'd discuss what could probably be the most asked question in my field, in my line of work, real estate development. This question may be asked, and has been asked many times from me by some friends and many of my clients. This question also is what I try to answer as a real estate developer. What will I do with my property or my land? How will I benefit, profit, or make money from it? If you're asking the same question, what you actually have is a happy problem. I'm sure many of you would like to be in your position. It may be that your property is inherited, handed down to you by your parents. It may be that you've bought it specifically from excess cash, and as many advised, bought it as an investment. Or however you have held possession of your land, take note. You are blessed so much more than burdened. Your property can have several things on it. 1, you can build factories or industrial parks. Or 2, you can build schools or hospitals or institutional buildings. Or 3, you can build homes or residential buildings. Or 4, places of work or offices. Or 5, you can build malls or commercial buildings, or actually others, hotels, resorts, memorial parks, etc. As you see, real estate comes in many forms. It could be that the land is simply empty, or it could contain buildings or structures of one of many or mixed forms and uses. For simplification, let us first talk about an empty land. What can you do with your empty land? I'd say you have 5 major options. I will enumerate and I'll discuss each option or alternative course of action briefly here. We will be tackling or discussing in more detail each one in succeeding videos. 5 options. Yes, one has a lot of options, and aside from that, there are many factors one has to consider. First option. Sell your property as it is right now, raw, undeveloped, without any improvements introduced. You will have no need to spend for it. Second option. Build first, then sell. Improved, developed, with improvements introduced. You will need cash or capital for this. Third option. Lease it out as it is, raw, undeveloped, without any improvements introduced, without spending on it. Fourth option. Build first, then lease it out. Improved, developed, with improvements introduced. Same with second option, you will have to spend to develop the property. Fifth and last option, hold on to your property, let it ripen with age. With very few exceptional cases, real estate or land, your property will appreciate in value through time. To summarize so far, we have enumerated 5 major options. 1, sell it as it is. 2, build first, then sell. 3, lease as it is. 4, build first then lease it out. And number 5, hold on to the property until the right plan comes along. You can even think of the options as just 3, with the grouping of 1 and 3 and 2 and 4. One thing that a landowner can do is sell the land as it is right now. By the way, the assumption we're making here is that the land is empty, for simplification. The empty land is often called raw land. By dictionary definition, raw land is land found in its natural state, without any improvements. Another way the real estate industry calls it is undeveloped land. What is expected, though, is that your property cannot demand a higher price as compared if it were developed. This option is chosen mostly because the lot owner is in dire need of cash, needs to sell assets or properties, and has no more capital to make any sort of improvement on the raw land. In some cases, there are niche investors who focus or specialize on the buying and selling of raw land. They may have cash, but dedicates them for purchasing of land that are at a relatively low price, rather than spending that money for development. What's common to the 2 types of empty lot owners is that they'd sell without spending cash for the improvement of the raw land. That is what is good about this option. The lot owner will not have to put out cash from the pocket. There will be a few expenses, but they can be sourced from the payments that is from the buyer. This is normally the case for selling transactions. The real estate brokers will be paid their professional fees or commissions from the payment of the buyer. The real estate broker is the person who is duly licensed, meaning he or she has been certified by the government to be knowledgeable and competent in facilitating the sales transactions and managing the sales documentations. The licensed real estate broker has moral obligations and is duty-bound to provide the best advice, guidance, and servicing. Hence, the clients are obligated to pay them for their duties. Just a side note, in some cases, it is the landowner who pays the fees of the broker. In fewer cases, the broker can have both parties, but that is too complicated, especially in terms of trust being fully impartial and fair. There are other costs, like taxes, government of documentation fees, and the miscellaneous stuff like transportation, meals, etc. Going back to an earlier statement, we cannot expect the best possible returns for the property. Bigger returns will require bigger investments, obviously. When I said it can't command a higher price, you'd ask, but how low of a price is low? Take note the value of your property depends on many factors. A few of this would be: A. Location. How close is it to major destinations like the workplace, your office, the school, the market, etc.? What's the environment or surroundings like? Is it peaceful, secure, and quiet? Is it busy and burdened by traffic? Is it in a natural, disaster-prone area? Does it have a good view? Is it accessible from the public road, or does it have road frontage? Do public buses, jeepneys, or tricycles traverse the area? B. Physical characteristics. Is it flat or is it rolling? Does it have steep slopes? Is it fertile for farming? Is it irrigated? Is it prone to flooding or maybe landslides? C. Special conditions. Are there any legal limitations to your property? For instance, you're only allowed to have residential buildings and not commercial ones, or it is just for agriculture or farming, or you're near the airport and can't build tall buildings. Or another limitation you have is that you used your lot for a loan as collateral. It's under mortgage. Next is option number 2. Build first, then sell. You can build a house or several houses depending on the size of your lot and on your capital. You can even build a multi-story building or buildings. You're not limited to residential products. There are other uses of real estate. You can build an industrial park with roads, sewage treatment plant, or other facilities, and sell the lots to manufacturers. You can build residential or even office condominiums for sale. Condotels or condos that are operated as hotels can also be an option. You can also build products not just for the living. You can build and sell columbarium, mausoleums, or other memorial products. The revenue potential is magnified the bigger and the more you build, but so will the capital requirements be. The bigger the investment, the bigger the return. But what if you have some capital for development, but not enough for your bigger plans? One option is to borrow. Most likely it will cost you some more on interest charges. These vary depending on prevailing economic climate and generally on the risks involved. Speaking of risks, lending institutions, like banks, should also require some security against the loan. This is in the form of collateral. This is an asset, usually real estate, that is pledged as security for the repayment of the loan, to be forfeited in the event of a default. If you fail to pay what you borrowed, the bank takes possession of the collateral. Using other people's money or the bank's money is also called leveraging. Key word there is lever. Remember your physics lesson on simple machines, how levers multiply the effect of the force and makes work much easier. It's the same with financial leveraging. Future lessons or videos will discuss this further. Your return on equity will be much higher, a vital financial metric you'll soon learn. Another option is to have a joint venture partner. You can have a more experienced and better funded developer as a partner to help you build on your lot. Returns to your lot will be based on the developed value of your property, higher than if it were raw and undeveloped. Development, though, takes time. Hence, if you're on a rush to get paid, this mode isn't for you. Take note, simplified, the process involves the following: conducting market, financial, and engineering studies, planning, architectural, structural engineering, mechanical, electrical, etc. Acquiring permits and clearances from government regulators. These even before you begin construction per se. And before selling, there will be marketing activities first. And when finally the products are being sold, not many pay the selling price in full cash. Most will pay in installments, hence you wait. Waiting isn't all that bad though, when you can earn extra on interest. More on this on future lessons. Again, to summarize option number 2, you can build first on your land to maximize your earning potential, but you need to spend for development costs. If you're short of cash for your ambitious plans, you can borrow or have partners. Now, option number 3. Don't sell the land, just lease it out, raw, undeveloped, without any improvements. This is ideal if you're not in need of big cash inflows ASAP. Cash will flow in without you spending on its development. The lessee or tenant is the one who will have to put out cash to make investments on the construction or setting up of facilities, and even on the upkeep and maintenance of the structures to be built on the land. The lease rate will be comparably low, as your tenant or lessee will still need to invest heavily on building on your property before they themselves generate income from the developed property. Leases like these are normally long-term to allow tenants to recover their investments in building on your property and making more money off of it. 25-year lease terms are common, some shorter, some even longer. The duration is negotiated by the tenant and their investment on it in mind. The bigger their capital in making improvements, the longer time they need to break even or recover the capital and to earn profits from it. Your land's lease value will depend on where your raw land is, how it is physically, what are the needs in your area, and how it compares with other similar properties. From previous lessons, we learned that in selling, the land value is hinged on the benefits, utility, or usefulness it provides. The same is true when leasing it out. To get the best price for it, you need to determine what could be the best use for it. There are many options. Let us mention a good sampling here of what tenants could use your land for. Moving on to option number 4, lease it out, but build on it first. This way you can charge higher per square meter lease rate, and you can even increase leasable areas. Higher rental rates can be had because you're no longer offering empty raw land, but developed areas, with walls, floors, roof, and amenities. You can increase leasable floor areas by building above ground or even below ground. Leasing out properties generates more or less steady income. Cash inflows are recurring. Wouldn't that be nice to have a cash cow? Cows do need to be taken care of though, else you won't have milk. Buildings need to be cleaned, secured, and maintained. Those need recurring costs too. The good thing is, you can have your tenants share in those costs. You can charge CAMC or CUSA. What they are will be covered in a future lesson on property management. Lease contracts between you, the property owner, and the tenant can be for a period of a year or more, or less. You can ask for rents in advance and for deposits. You can also include provisions on rate escalation or lease rate increases. Again, do watch the lesson on commercial leasing. The fifth and last option is just to hold on to the property. Do nothing. That can be the easiest option to do. Nothing. Land ages like fine wine, they say. Its value should get better with age. Population grows. Demand for land grows with it. Supply diminishes. The law of supply and demand governs. Yes, eventually your property will appreciate in value. In the meantime, be aware, there are what we call carrying costs. Landowners are required to pay real property taxes annually. If your lot is within a managed subdivision, you will need to pay monthly dues for upkeep. Otherwise, you yourself will have to do your own upkeep. For this last option, you'll still make money, but after a long time. This option is for those with other sources of income. A big advantage of these last three options is that you retain ownership of your property. Key real estate lesson: land is finite. Mark Twain said, "Buy land, they're not making it anymore." Now to summarize, we provided 5 major answers to the commonly asked questions. What will I do with my land? You can hold on to it, you can lease it, or you can sell it. You can lease or sell while it's in its raw form, undeveloped and unimproved. Or you lease it or sell it after you've invested on the improvements or developments on the land. In future videos, we'll discuss each specific product type or use it in more detail for, say, residential, commercial, hotel, industrial, office, etc. Please utilize the comment box below if you have any questions or wish me to discuss a particular real estate development topic. And so you can be notified or follow us for new videos, please subscribe or click on the bell. Join us as we learn about real estate, the whats, the how-tos, and even the whys, or the reasons why it is important that we learn more about real estate.